I think retrofit is important. Obviously, if we're looking at it from a climate change perspective, a massive proportion of the buildings that we're going to have in 2050 are already existing. Yes, it's harder. It uses a lot more creativity to go to an existing building and upgrade it in a sustainably way. However, it absolutely needs to be done. But I think from what we're seeing is there are a lot more drivers in the market than there currently was. Exactly, it was planning. A lot now is the EU legislation that's coming in terms of finance, EU taxonomy. So a lot of funds who have got existing assets, they absolutely need to make sure that they have got green credentials. So net zero is obviously one of them. GREAM might be another one. EPC legislation is coming down the road as well. So in terms of the Savills project that you were talking about, that it's won a few awards. Well done, Savills and SRE. It was the first net zero industrial estate in the UK and the only industrial estate with a waiting list for tenants. When it was bought in 2019 by the fund, then the pension fund, it had a rental value of £9.40 a square foot, which was 32% below the Guildford average. It had EPC ratings of D&E, leaking asbestos roofs, a third tenancy vacancy. It now has EPC ratings A and A star, A and A plus. It has BREEAM excellent, policy net zero. It's as I said, the only rating list industrial estate with a waiting list for tenants. And the rental value, when it is originally let, was £20 a square foot, which was higher than anywhere, including London prices. And then a unit that became vacant in November actually went to £22.50 a square foot. And the asset value has pretty much over tripled. So that's a real success story in terms of if it's done properly, then actually sustainability can definitely add value in terms of yields and asset.